Let me show you what I mean about information overload. This is a typical retail trader's chart. You've got RSI in the bottom pane, M8D below that, a couple of moving averages crossing over each other, and price just sitting there doing whatever it wants. Every one of those indicators is technically telling you something, but they're not agreeing with each other. RSI says overbought, MACD says the momentum is still bullish, the 50 EMA is below price, but the 200 is above. What's the trade? That's the gap I'm talking about. Traditional indicators are reactive data outputs. They process what already happened and give you a reading. The interpretation, the actual decision, still belongs to you. An AI decision layer flips that. Instead of raw readings, you get a call. Here's what the market structure looks like right now. Here's where the shift happened. Here's the signal. Go. The tool I've been using is LuxAlgo. Specifically, their Signals and Overlays toolkit, which runs directly inside TradingView. If you already have TradingView, you don't need to switch platforms. You install LuxAlgo as an indicator on top of your existing charts. Here's what it actually does. LuxAlgo has several components, but the two I use most are Signals and Overlays, and the Price Action Concepts overlay. Signals and Overlays does three things simultaneously. It identifies trend direction, it plots buy and sell signals at key structural points, and it draws what they call a confirmation channel. Basically, a dynamic range that shows you where price is expected to behave versus where a breakout is meaningful. The buy and sell signals aren't just based on one calculation. LuxAlgo's algorithm is combining trend analysis, momentum, and volatility into a single output. The result is a colored arrow, green for buy, red for sell, painted directly on the candle where the signal triggers. You don't read a number and decide. The chart tells you. Now let's talk about price action concepts, because this is actually the piece most people overlook, and it's arguably more valuable. Price action concepts is LuxAlgo's market structure overlay. This is based on how institutional traders actually read charts, not indicators, not oscillators, but raw structural breaks. Concepts like order blocks, fair value gaps, and what LuxAlgo calls change of character, which is when the market structure flips from bullish to bearish, or vice versa. Here's why this matters. A change of character signal on price action concepts is not a lagging indicator. It fires at the moment the structure breaks, when a market is making higher highs and higher lows, and then it suddenly prints a lower high. That's a structural shift. Price action concepts marks it in real time with a label on the chart. No interpretation needed. The AI identified the shift and labeled it for you. This is the difference I keep coming back to when I explain this to people. Traditional setup. You see RSI divergence at a top. You know divergence can signal a reversal, but you don't know if this particular divergence will follow through or just reset and rip higher. You make a judgment call based on experience, or you don't take the trade and miss the move. LuxAlgo setup, the change of character fires. The market structure has officially shifted. The algorithm confirmed it. You're either in the trade at that level or you're not, but the call has been made for you. Let me walk you through a live chart walkthrough, because this is where it gets real. I'm going to use SPY on the 1 hour chart. This is April 2026, and the market has been volatile. Tariff headlines, CPI surprises, mixed jobs data. This is exactly the kind of environment where traditional indicators break down because the noise overwhelms the signal. Pull up the chart from April 7th. The market sold off hard that morning, about a 1.4% drop in the first 90 minutes. If you were running RSI alone, it went oversold fast. Classic RSI behavior in a panic sell. It screams oversold, but the price keeps falling anyway. An RSI trader either panicked into a long too early or held off entirely and missed the setup. Now look at what LuxAlgo called on that same chart. Price action concepts identified an order block from 3 days earlier, a zone where institutional buying had occurred before the previous rally. Price came back to that zone on April 7th. The algorithm flagged it. When the candle closed back above the zone with a structure confirmation, LuxAlgo's signals and overlays printed a buy signal. Not because RSI bounced, because the structural logic of the chart said the selling was done and institutional support was active. That's a different kind of signal, and it held. SPY ran about 2.1% over the following 3 sessions. Let me give you another one from the same week. April 10th. SPY pushed up to the 515 level, a level it had failed at twice before. Traditional moving average traders would have been long from the 50 EMA cross, lower on the chart. RSI was pushing into overbought territory. LuxAlgo's price action concepts showed something different. There was a fair value gap, an unfilled price imbalance, sitting about 2% lower. These zones act like magnets. The algorithm showed that the previous rally to 515 had left a gap that hadn't been revisited. That's a structural reason to expect a pullback, not a breakout. Signals and overlays printed a sell signal near the 515 level when the candle structure confirmed resistance. SPY pulled back to 505 over the next 2 sessions, directly into that fair value gap. Now I want to be honest with you here. LuxAlgo doesn't have a 100% win rate. Nothing does. There were 2 signals it called this week that didn't follow through. One buy signal on QQQ that got chopped out when an unexpected headline hit mid-session, and one sell signal that the market just ignored and ran straight through. Those happen. What I'm evaluating is the quality of the calls over a series, not whether each individual signal is perfect. Over the 4 weeks I've been running this, I tracked 31 clear signals across SPY, QQQ, and NQ futures. Of those, 19 moved in the direction of the signal by at least 1.1 risk reward within the session, or within 48 hours. That's a 61% rate on clean, AI-identified setups, without me having to make a single subjective call about what the chart was saying. For context, most professional systematic traders are working with win rates between 45% and 55%, a 61% rate on setups identified by an overlay, where the only decision I had to make was whether to take the trade or not, is genuinely useful. Let me talk about the comparison to trading without it. For the 2 weeks before I installed LuxAlgo, I was running what I'd call a standard retail setup. RSI, MACD, and a 2050-200 EMA stack. It's the setup that Trading YouTube has been teaching for 15 years. I know how to use it, I've made money with it. But here's what I noticed. I was spending 20 to 30 minutes per chart session just trying to synthesize what all those indicators were telling me. Do they agree? Is the divergence meaningful? Is this a fake breakout? That's cognitive load that doesn't generate returns. It just burns time and creates second guessing. LuxAlgo compressed that to about 5 minutes per session. Chart opens, I see the current market structure, I see the last signal, I see where the price is in a confluence zone. The decision layer has already processed the inputs. My job is just to manage the trade. That's a qualitative change in how trading actually feels. Less anxious, more systematic, and in a market environment where sentiment is already skittish, consumer confidence hitting a 14-year low in February 2026, uncertainty about policy and employment, having a process that doesn't require emotional interpretation is actually a psychological edge as much as it is a technical one. LuxAlgo runs at 20 semalalon to 32.99 per month, depending on which plan you're on, and it operates directly inside TradingView, which you may already have. You don't need a separate platform or API. It works on whatever charts you're already using. If you want to try it, the link is in the description below. I'd recommend starting with signals and overlays and spending a week just watching what it calls on a chart, SPY or QQQ or whatever you trade. Don't trade it yet, just watch it. See if the logic tracks with how price actually moves. Once you trust the signal quality, adding price action concepts on top of it gives you the structural context that makes the signals make sense. Here's my honest assessment of where this fits in a trading workflow. LuxAlgo is not a bot. It does not execute trades for you. It identifies setups and makes the call, but you still have to pull the trigger. If you're looking for something fully automated, this is not that. What it is the most efficient way I've found to go from chart to decision without the analysis paralysis that kills most retail traders. For someone who is new to trading and overwhelmed by conflicting indicators, LuxAlgo gives you a clean single output to work with while you build market understanding. For someone experienced who already knows how to read structure, it dramatically speeds up the analysis phase and adds a layer of algorithmic confirmation to setups you might otherwise pass on because you weren't sure. The thing that keeps me coming back to it is simple. I don't have to decide what the chart is saying. The chart tells me. That's the whole point of a decision layer. And this one actually delivers on it. Links are in the description. TradingView link is there too. If you don't already have an account, check the description for the best available entry offers for Black Bear Finance viewers. Coming up next on this channel, I ran a head-to-head comparison. LuxAlgo and TrendSpider's AI analysis on one side, RSI, MACD, and moving averages on the other. Same chart, same 30 days, different signals, and the gap in results is not what I expected. That video is publishing this week. Hit subscribe so you don't miss it.